Welcome to our Meet the Management interview. My name is Emma Montocchio, and today we will be discussing the growing role of the fractional CFO and why more South African businesses are really turning to this model to support growth and to navigate an increasingly complex business environment. So to unpack this topic further, I'm joined by Rowan de Klerk, CEO of the CFO Centre South Africa. Rowan, thank you so much for joining us today. Maybe I can give you the floor and ask you to briefly introduce yourself, and then we'll get into our questions for today.
Hi, Emma. Thanks so much for having me. So I'm Rowan. I started the CFO Centre 16 years ago. Before that, I spent some time in corporate, but I think what attracted me most in my last corporate role was a junior listing on the stock exchange involving some smaller businesses packaged into a listing. And I really enjoyed working with entrepreneurs, and I saw that my passion was there, and therefore I started to actually move into that part of the world and started my own practice as a fractional CFO back in the early 2000s before CFO Centre.
So before we get into the topic of the fractional CFO, you work with CFOs across multiple industries and businesses throughout South Africa. So from your perspective, what is the current state of the economy and what are you seeing business leaders being most concerned about right now?
So it's an interesting economy. We talk about 1% growth or less than 1% growth, but there are, since last year, the last quarter of last year, we've definitely seen an uptick. We've seen it in the rand, we've seen it in investment markets, and it has trickled through into the business sectors. Not all of them, but we're definitely seeing some uptick in mining. We're seeing interest in infrastructure as some government strongholds have been released, like the transport industry, trains. We've seen growth in, obviously, tourism has just really kicked off, especially for places like the Western Cape. Our agriculture is always strong because the world needs food, it needs produce, so we produce a lot and we export a lot. So those industries are always thriving, and it's good to see that there is a regeneration definitely in the economy.
For those who are not familiar with the concept, you briefly touched on it in the intro, but what actually is a fractional CFO and what is the driving demand for such a model in South Africa?
So if you think about a corporate, they normally are quite strong in their particular market share of a sector. It's not just because of genius of one person. They have a very strong leadership team, executive team, made up of various disciplines. And the most important being obviously the CEO and the finance head, the CFO, and various others that help in decision making and help in analyzing the business to make sure that they make the right choices for the future. So how does a smaller, mid-size or smaller business access those sort of skills when they can't afford them? And that's what happens with a fractional resource at any of the C-suite disciplines, but particularly for finance, because finance really, without the right finance and without the right strategic finance, that's the loans or the funding that you need or the equity that you need, capital injection into your business, you often can't grow, flourish, thrive, and reach those dreams and that vision that you have. So that's why finance is important. And what we've done with fractional is we've allowed a smaller business to access those skills part-time. That means 1 day a week or 2 days a week or 2 days a month for the amount of time that they need and what they can afford, so that they get access to the high level and they can still achieve their dreams and goals, but it doesn't cost what it would to hire that person on a full-time basis.
So at what point should a business owner start considering a fractional CFO, and what are the warning signs that they've kind of outgrown actually managing the finance function themselves?
It's different for different industries, but I think mostly it's when you can't deliver and your cash flow is very tight. The operational setup of your business is constrained. You don't have the right people. You need to hire stronger leaders in the business, middle management and senior management. You can't afford it. You need to invest in capital equipment, capital assets. You can't afford it. So you need to raise funds, but your business isn't set up in the best way possible to actually access those funds. So the banks say no. So therefore, you need a finance headset to come in and actually look at everything and say, well, how do we structure this so that we can go to market, go talk to financiers who are serious about lending money, giving them the right information in the way they want to see it. So that's normally when it happens, and it could be different for different reasons, but normally there's chaos, some kind of chaos, and that needs to be organized a little bit, and finance people are usually quite good at that.
Maybe you've experienced this, but my personal opinion is that I'm sure entrepreneurs often protective over the finance function, obviously, particularly in the early stages of their business, but maybe to encourage people to, or business owners to look into this fractional CFO. Do you have an example that you could share where a business owner was initially hesitant, but where a fractional CFO ultimately delivered significant value?
Yes, people normally come to us when there's a need. There has to be a pain, and that pain can be often around cash flow. They're not making profit. What's happening with the business? What can they do to restructure things so they can get back on track? And so for us, it's the intensity of what can we actually do when we come in there, and we have a short space of time to deliver and to show them that we actually are of substance. So normally it's about a quick win. It's about having a conversation that shows them and helps them understand how we can improve things, or doing something that will get their attention to improving in their business, like saving them on tax or helping them get more profit on a particular large transaction with a customer, something like that, or bringing in some money from a long outstanding debt that hasn't been recovered for a long time and that people have been struggling to get in, that sort of thing. So there's lots of clients that I can think of, but one in particular, we joined him, quite some entrepreneurs can be fairly prickly personalities, and he had quite a few subsidiaries in the business, and a lot of compliance was outstanding. We're not normally compliance pros, but in this instance, there were about 10 different entities, and a lot of taxes and legal compliances and company returns hadn't been done. So we came in to tidy this all up, and I think there was a lot of sort of frustration with all the notices he was getting and the penalties and things like that he was getting for not being compliant. And so we went in and tidied this whole situation up and shut the companies down that needed to be shut down. So it was a reorganization of his group structure. And he was very delighted at the end of it, because the pressure of these various bodies bothering him all the time for compliance and the penalties he was being charged went away. So that was quite an easy way to sort of build that confidence with that particular client.
Maybe a kind of out there question, looking for global trends. Does the growth of fractional CFOs in South Africa mirror global trends, and how do you see this model maybe evolving over the next few years?
I'd say South Africa is pretty much up with global trends. I mean, our entrepreneurship is really strong, and I say that not out of a vacuum, because we work in a group of 20 different countries, and I work a lot with first world countries, UK, the States, Canada, Australia, parts of Asia, and I feel that our entrepreneurs are of a very good ilk, and we can really stand up against the rest of the world. So I think we are outward looking. We see, and a lot of our entrepreneurs are already supporting export markets, and their customer base is an export market. So I think we do follow the global trends, but in the first world countries, there's more cash, there's more money around, there's big investments, and those countries also have a lot more legal regulation that prohibits them from doing certain things without the right professionals in place. So they actually do need CFOs in a way more than we do, although our legislative framework is becoming as complex. So the more complex the situation, the more challenging, often that is where entrepreneurs need support, and they would call on a CFO. So I do see that it's more popular in Europe and the States, but we are certainly getting there as far as South Africa is concerned.
Well, those are all my questions that I had for you today. So thank you so much for sharing all your insights with us. And obviously, thank you to our audience for watching. For more interviews and insights from South African business leaders, please check out our Meet the Management series and other videos. So from myself and Rowan, thank you. And until next time, thank you for watching.